Hey, good morning. Before we jump into today's plan, just a quick reminder that this video is being recorded much earlier than usual, about 2:25 a.m. Central Time right now. So the overnight range is still being established. So at this point in time, the pre-market resistance zone is 73 to 74.5, and it is a short-term inflection point, but not a major resistance area. So in the overnight session, if the buying continues, we could very well break above that zone and go higher up into 79.5 and potentially the previous VPOC at 83.5. The primary resistance zone on the day is 85 to 87. That's really the main inflection point in the recent range, and that's really what's going to decide whether buyers are really stepping in and starting to take control, or whether this is still a mixed market where we're seeing some strong responses from both sides, buyers and sellers. So on the upside, 85 to 87 is primary resistance. On the downside, we have immediate support at 66.5 to 68.5. Holding above that would tell us that responsive buyers are active in this market, and if we continue to balance above the pre-market support zone, then we could be setting up for a upside move at this point. Because on the larger time frames, the market is still testing support, and we are continuing to see pretty strong buy responses and pretty strong moves to the upside. It's just that every upside move has been countered with some pretty strong selling as well. And yesterday's neutral day just tells us that there is indecision in the market, and that neither side is really in control. It's a very mixed market at this point, and hopefully after today's FOMC announcement, we can get some resolution on direction and really kind of see which way this market is headed. So, keep an eye on pre-market support, 66.5 to 68.5. The previous swing low from the other day is 61.5, and as long as we're holding at least pre-market support, the buyers can still step in and push this market up to 85 to 87. And then if that zone gives way, then we could be setting up for a more extended move higher. But if we fail at 85 to 87, then we could just come right back down into the overnight range into 73 to 74.5, 66.5 to 68.5, potentially even lower. On the downside, a break and hold below 61.5 would be a confirmation that this is still a very weak market, and at that point we could quite easily go down to the 56 quarter support, the 52 quarter to 54 quarter zone. We have an open gap at 1950, naked VPOC 48.5, and those are still areas where we can still get responsive buyers active in this market. So that's something that we will have to gauge in real time. If we're going down on really massive momentum and some really weak internals, then perhaps skip the long setups until the market gets really exhausted, perhaps down into 48, 49, maybe even lower. Again, that's something that we'll have to gauge in real time. And if the momentum is really weak and to the downside, then skip the fade setups altogether, right? Look for the high quality setups at the key reference areas, at these key support resistance zones. And if in real time you're seeing some strong signs where the market is just liquidating, then there's no point in stepping right in front of that until the market gets quite exhausted, or at least you start seeing some signs of a turnaround. Same thing applies to the upside. Above 85 to 87, if there is a lot of upside momentum and the market is now going directional back up towards 01 to 02 or 10 quarter, 12 quarter, then again, you don't want to just step in front of it just for the sake of fading at a resistance zone. You want to see some signs in real time that support the idea. The underlying context and the underlying environment has to be there to support the short side if you're going to step in at a resistance zone. 85 to 87 could be a pretty decent short first time up, as long as we're not rallying up to it on very strong internals and a strong upside tick reading where it's just sustained above zero. And even then, the first test can provide rotation, but after that, if you blast through 85 to 87, that would be a confirmation that buyers are dominant again, and we could go right back up to the recent highs. Over the last couple of sessions, there hasn't been any directional conviction, one side or the other. Both sides have been very active, and now ideally after FOMC, we can get that resolution, but ahead of FOMC, we can still get some two-sided movement. So, it could continue to chop in a range ahead of the announcement, and then once the announcement is out, then we get some directional movement. So those are really the main ideas for Wednesday. Let's see where the S&P ends up opening up in relation to pre-market resistance and pre-market support. That'll help us establish the directional bias short term. And then let's see how the market reacts at 85 to 87 or at the recent swing low of 61.5. That'll confirm the short-term direction, and we will take it from there.